Today was another big day in markets as central banks around the world move to act against inflation by continuing to raise rates. Here's what we have as of the latest. Central banks continue to tighten to tackle inflation. The Bank of England raised the key bank rate by 25 basis points to 4.25%. Now, if you guys remember, of course, yesterday we had the Federal Reserve also raised by 25 basis points. The UK is behind in terms of, the US is at 5%, UK is at 4.25%, but this came out as expected, and the Swiss National Bank increased its key policy rate by 50 basis points to 1.5%, bringing borrowing costs to the highest since 2008. Despite the recent turmoil in the banking sector, the Norges Bank, I think I'm saying that right, also hiked interest rates by 25 basis points to 3%. And in Asia, central banks in the Philippines and Taiwan also tightened. Yesterday, the Fed raised rates by 25 basis points as expected and dialed back expectations of a rate cut this year. And guys, that last little bit right there is what caused so much volatility. For those of you guys who are confused by yesterday's price action, initially the market sort of rallied. Optimism came into the world as rate hikes came out, and it seemed like, hey, they're possibly going to signal rate cuts going forward. Not the case, at least in the end of Jerome Powell's press conference. He ended up saying that rate cuts are sort of squashed. The chance of that this year is very little. So that was sort of what caused so much volatility there. Also, here's some key points about the Bank of England. The Monetary Policy Committee voted 7-2 in favor of raising the bank rate to 4.25%, in a widely anticipated move after official data showed that UK inflation unexpectedly jumped to an annual 10.4% in February. Scary stuff, and we'll take a look at inflation in just a moment when regarding the British pound. The bank's Financial Policy Committee has determined that the British banking system, however, remains resilient after recent bank failures in the US and in Switzerland, with Credit Suisse and several of US banks going under, especially regional ones recently as well. So let's jump into the charts and see what's going on there. All right, guys, so we're over on the charts, and I think we've got to take a look at a couple things. And I wanted to start with gold. So gold is a trade that I am personally in. I caught this trade and shared it within our signals group a couple days ago, and we've been running really, really hot on this. Part of the reason that I was long gold biased is actually from the Edge Finder. And many of you guys, if you're not familiar with the Edge Finder already, if we pull up the gold chart here for a second, you can see gold has been giving us a bullish signal, and it's several factors. Trend to the upside is a pretty clear one. We have our trend projection chart. Seasonality is another one. The month of March is historically positive. Retail sentiment also very heavily short. So retail traders right now, guys, if we zoom into this section, retail traders are short on gold very heavily. Trend reading also to the upside, as I mentioned. And economic numbers a bit mixed overall. But we get a +5, which is a bullish signal on gold. And right now, we're going to do something that we have not done in a while here, or actually ever before on my channel. If you guys want to try out the Edge Finder, we're giving out trials today for free. We have people in the office who are ready to set you guys up with a copy of the software. If you'd like to check out the software for free, there's going to be a link at the top of the description. If you click that link, open that up and type the word free trial to one of our support reps. One of them will get you set up with a free copy of the Edge Finder today to go through our market data, to try it out for yourself. You can check out the bank signals tab. You can read into COT data, retail sentiment, try it out for the day and see if it's a fit for you. Make sure to take advantage of that while that offer is available. Just click the link at the top of the description and chat with one of our support reps there. So back to the gold chart here for a second, and what you can see is that, again, things are looking really strong. We got bullish on this one on a retest here as it sort of dipped off the highs. We were looking for an opportunity to pick up the long side of this trade. I think that gold has a good chance of continuing back to the previous high. And if it's able to crack through the top of this range, what I'll be looking for is to sort of try and trail my stop and continue to take this trade higher. So let me actually show you guys my trades. I'll pull this up so you can see it on the screen. So I have two trades related to gold right now. The first one is this GLD long trade, which is basically just trading gold. And I also took a little bit of an interesting one as well. I'll show you in just a second. So let me just get this first. So here's the daily chart. Let's drop it down to the 1 hour chart one more time. So you can see here's that pullback. Price came down. I entered in my position. A little bit different than CFD trading, I know, but basically it's the same thing, ETFs on the stock market. I'm trading gold long here. I went long here, and prices rallied pretty good so far. Looking for a return back to the highs. I'm floating about $200 on this trade, and my other trade is Newmont Gold. This is basically a gold miners company, which very closely tracks what gold is doing. It's almost like a little bit of a higher leveraged position on gold, but I have a trade open on this one, and so far pretty good as well. So $400 on that trade as well. So that's kind of my current position when looking at the gold market. I'm looking, like I said, for a return back to the highs before trying to trail my stop further into profit. Now we also want to talk a little bit about the pound. So the pound here raised rates, and they made a comment that we talked about at the beginning of this video. They discussed the fact that in terms of forward guidance, they are saying that the banking system in the UK looks fine. They're not too worried about it, and they'll continue to press on to try and squash inflation. The problem is, however, that inflation in the UK is very high. And if I pull up the inflation data here, what you can see here is that as of the most recent data, you can see that inflation ticked back up in the UK, which is a red flag for sure, and may trigger more rate hikes from the UK than perhaps even previously anticipated this year. Again, a tick up in inflation is a big red flag, as that can be very devastating to an economy. And so that tick up is a red flag for UK inflation, of course, and which also may prompt more interest rate hikes. And when we compare interest rate numbers for like the UK and the US, etc., we can see that, you know, the UK is behind. We've got 4% here. We just ticked up to 4.25% as of the latest data, just has not yet updated. But yeah, that data coming in shows that we're still behind the US at 5%, New Zealand at 4.75%, CAD at 4.5%, and we're comparing interest rates across the board with that data. Remember, you can try this out using the link down below in the description if you want to check out our data for the day. Click that link, just send the word EdgeFinder free trial, and one of my support reps here at A1 Trading will set you up with our data for free. So there you go. The pound looks really strong. It's continuing to be strong. And, you know, as we retested today, within all this volatility, buyers came in really, really heavy here. Dollar weakness still seems to be the case. And with that, the pound sort of rallying. Now, I'm not personally very bullish on the pound specifically. If I'm going to go against the dollar right now, my favorite trade continues to be gold. And in light of all this volatility, you know, I'm also interested in the S&P 500. The stock market looks pretty strong. If, you know, before I get long, I've mentioned that I'd like to see this thing be able to break some key levels on the higher time frames. For those of you guys who are watching S&P, I'd like to see this thing break through the highs, pull back, that sort of thing, continuations. If that starts to flip bullish, we'll probably see indications of that on the Edge Finder. Here's a look at your watch list currently. The watch list page gives us a look at all of our factors, including COT data, retail sentiment, so on and so forth, and punches out our overall biases. What you can see is that in terms of indices, US 30, SPX 500, UK 100, German 30, these are pretty long-oriented assets right now, compared to, short-oriented assets compared to our long-oriented assets like gold, USD CAD, NZD CAD, Euro CAD, Euro Swiss, and dollar ZAR. So a couple things to look out for. And like I said, I'm already in that gold trade, large in part due to the signal that we received on the Edge Finder. I then looked for technical setups and was able to find one that has run very hot so far. Hey, guess what? I just found a video made just for you. Click this video to help with your trading, and thanks for watching.